Every year, trillions of dollars move through the global economy, but a disturbing portion of that wealth vanishes into tax shelters, offshore accounts, and creative accounting tricks designed to help the wealthiest corporations dodge their public obligations. Meanwhile, average workers contribute to the system through every paycheck. Local businesses struggle under the burden of full taxation, and public institutions suffer from chronic underfunding. The truth is simple. The corporate tax system is rigged, and it's rigged by design. Corporate tax avoidance isn't an accident. It's a feature of a global financial system that prioritizes shareholder profits over civic responsibility. Through an elaborate web of loopholes, subsidies, and tax havens, major corporations like Amazon, Apple, and Google have legally avoided paying billions in taxes despite generating massive revenue. In many cases, some of these companies have gone years without paying any federal income tax at all. How does this happen? It starts with loopholes written directly into tax codes, often with corporate influence. These include deductions for intangible assets like intellectual property, the manipulation of transfer pricing, where subsidiaries in low-tax countries bill high-tax jurisdictions for goods and services, and the use of double Irish with a Dutch sandwich schemes, complex strategies that shuffle profits through countries like Ireland and the Netherlands before parking them in tax havens like Bermuda or the Cayman Islands. The end result is a system where the world's most powerful corporations contribute less, percentage-wise, than a teacher, a nurse, or a small business owner. And the impact goes far beyond numbers on a balance sheet. When corporations don't pay their fair share, the public pays the price. Roads crumble, schools go underfunded, hospitals close, and communities are left to fend for themselves. Governments are forced to either cut services or raise taxes on individuals and small businesses to make up the shortfall. This is not just unfair, it's unsustainable. Some argue that lowering corporate taxes attracts investment and jobs, but the evidence doesn't support that narrative. Many corporations benefiting from tax cuts continue to outsource jobs, buy back stock, and boost executive pay rather than reinvesting in workers or infrastructure. In fact, research shows that public investment, especially in education, healthcare, and transportation, creates more economic growth and stability than corporate tax cuts ever could. Closing loopholes isn't just a matter of justice, it's good economics. The International Monetary Fund, IMF, has found that higher effective corporate tax rates, when combined with fewer loopholes, don't harm growth. On the contrary, they promote transparency, reduce inequality, and increase the capacity of states to fund essential services. The key is designing a system where corporations contribute based on real economic activity, not where they can stash their paperwork. Reform is not a fantasy. In 2021, over 130 countries agreed to a global minimum corporate tax rate of 15%, a historic attempt to prevent the race to the bottom, where countries compete to offer lower tax rates to attract business. While this is a good start, many advocates argue that the rate is too low and that enforcement mechanisms are weak. Still, it shows that international consensus on corporate tax reform is possible. At the national level, countries can implement unitary taxation, a method that treats multinational corporations as a single entity and taxes them based on actual sales, payroll, and assets within the country. This would reduce the incentive to shift profits abroad and level the playing field for local businesses. Moreover, governments must invest in enforcement. Corporate accountants are experts in exploiting ambiguity. Regulators need the tools, staff, and political will to challenge aggressive tax avoidance. Transparency laws requiring public reporting of country-by-country profits and tax payments can expose bad actors and pressure companies to act more ethically. There is also a moral argument that cannot be ignored. Corporations benefit from the stability, infrastructure, and educated workforce that taxes support. They ship goods on public roads, use public ports, and rely on publicly educated employees. To benefit from society while refusing to support it is not only unethical, it's parasitic. Ultimately, the fight to close corporate tax loopholes is about more than revenue. It's about power, fairness, and the kind of future we want to build. A system that rewards tax avoidance undermines democracy itself, concentrating wealth in the hands of a few while hollowing out the social contract. It doesn't have to be this way. With public awareness, political courage, and strong enforcement, we can end the corporate tax scam and redirect those billions where they belong, into our schools, our hospitals, our clean energy projects, and our communities. Because the wealth is there. The choice is ours.